What is up, you guys? In this video today, let me tell you, I am going to tell you 3 stocks that you need to be buying when the stock market crashes. You are watching this on Tuesday evening. I'm recording this over the weekend, so the market is closed. But here's the deal. Last week on Thursday, on June 11th, Lord have mercy, we saw a drop. Not like what we saw in March, but very close. It was the 25th biggest drop in the Dow Jones Industrial Average. The S&P 500 was down like 6% almost. The freaking NASDAQ was down like 5.3%. And so, you know, that got my mind. She was turning. I had some ideas, some thoughts. So I wanted to make a video about 3 stocks that you should buy if this trend in June continues that I think are on great discounts, at least from the close of last week. When you're watching this, obviously, I don't know what's going on with the market. We can't predict that, but I had to get this video filmed today. So these are going to be 3 stocks that I feel like you need to add to your portfolio because there is great growth opportunity within them. Also a dividend play. So y'all, without further ado, let's jump right into the video. You are new here, what is going on? My name is Nikki, and it would mean the absolute world to me if you would consider subscribing by hitting the NB in the bottom corner or the red subscribe button. Join the crew, join the journey. On this channel, I post 2 times a week, specifically Tuesdays and Fridays at 6:30 p.m. Pacific Standard Time, all about real estate, investing, stock market, money, finance, just my damn life. I believe life is a journey. Our journey is made up of a lot of different things, so I just document my steps along the way, and I believe everybody's journey is worth sharing. So if you are into that, or if you just enjoy hanging out with me half as much as I honestly love hanging out with all of y'all, please consider subscribing. So you already know I had to get that pitch out of the way, you guys. Let's get into this video because I am doing a way better job of keeping this information short, sweet, and to the points for all my guys out there and this many girls. Like I mentioned in the beginning of the video, last week, there was something that happened in your girl's head up here. I really got to thinking. And a lot of you know that I am a long-term dividend play investor here, which I like to dabble a little bit in like penny stocks or growth specific stocks, I guess. Not really. I'm thinking to myself like, Nikki, like you are young, beautiful, stunning, amazing. But you need to take some damn risk. So I'm looking for majority dividend payers. Okay, I want companies to pay me dividends. That's a non-negotiable. It needs to be done. But I'm looking for that growth potential. Those stocks that could really take off at some point. I'm not talking 100% growth because I just like security. Okay, I'm a girl. We like secure things. We like commitment. And so when you're committing to giving me money for putting my money into your company, I'm gonna go ahead and take that and run with it. 2 things really came to my mind. The first thing is that we have got to remember to stick with our strategy and budgeting our money into the market on a weekly basis. You have got to allocate yourself a little bit every week. That way you are dollar cost averaging your way into the market, into your positions. And long term, that is what you need to be doing. Don't miss a week. Get your finances right so you can allocate a certain amount every week. And then the second thing I already touched on is finding companies that have good growth potential but yet are dividend paying. So these 3 stocks are not going to be your dividend aristocrats, your blue chips. I mean, I could sit here and tell you to invest in Coca-Cola and J&J and AT&T and Apple and Microsoft. I'm not gonna do that. We know those are good companies. We know you should probably invest in them if it's up your alley. So I'm not gonna bore you with those ones. One of them is kind of in that realm, but I just love it so damn much. I can't, it's just whatever. It's gonna be the 3rd one, so make sure you stay tuned with that one because that one's actually probably my favorite on the list. But this is not gonna preach to you about buying Amazon, Google. I mean, like, duh, okay, duh. And also, we're not all flossing. We can't buy a $2,000 stock. Like, that's just, come on. So in this video, I'm kind of riding that I'm young, let's party. So I'm gonna pop up on the screen my Robinhood portfolio. You can see here it's around the $8,300 mark. I got about 150 bucks there for buying power. I'm not gonna go in depth about my entire Robinhood portfolio and update you guys on all of my holdings. If you want something like that, please let me know down below in the comments and your girl will make it for you. I promise I will. But I want to get into the first stock that I think we should own in our 20s. I think there's insane growth potential. I think it's such a well-established established brand. It's something I buy a tremendous amount of myself, and I just never really pulled the trigger because I wanted to make sure that I got positions in really great, sustainable, consistent, reliable blue chip companies. But I'm at a time in my life now where I'm ready to branch out a little. First stock I'm going to recommend to you is Nike. I'm not going to talk too much about what I personally think about Nike. I own an unbelievable amount of Nike. I was a former Division I athlete. I grew up in a gym. I grew up around sports. I grew up around the culture, and I was obsessed and still am obsessed with Nike absolutely wholeheartedly. So if you can see here, they were up about 1.3% on Friday. Last week, they're down almost 7%, which is why I think it's a pretty good buying opportunity. I think Nike under 100 is really great. And then if we look at the 1 year here, you can see they are up 15.47%. If I look at the 5 year, I always really like to look at 5 year charts, because look at this right here. This is what I call growth. And if we scroll down here, we can see their dividend ain't the best, but they do pay almost 1% dividend, which, I mean, I'll take anything, honestly. I don't like a 0, but I'll take a 0.99. Their PE ratio is currently around a 36. Could be a little high, but I tell you what, if you're gonna hold this stock for the next 20 or 30 years, it's gonna be fine. It's gonna go above 100 for sure, so I really wouldn't worry about it. And then if we also look here at the 52-week high, is 105, almost $106. The 52-week low is 60, and I should have grabbed it, but you know, you win some, you lose some. But I like that 52-week high. I don't necessarily like to buy at least high dividend like blue chip companies around their 52 high. Like say you did it with Coca-Cola. I don't think Coca-Cola is gonna grow an insane amount. I think it's steady where it's at and slowly grow. But something like Nike, I think buying close to that mark wouldn't be the worst, because I just see it kind of growing at an exponential rate over the next 20-30 years. And that is mostly because of a few things. So the main thing I already touched about is that Nike is an iconic athletic brand. When I think apparel, equipment, footwear, I think Nike. The second one I would probably honestly think about is either Under Armour or Adidas, and I know that Nike versus Adidas is a lot like Coke versus Pepsi. Adidas is trading around the $131 mark. So just right off the bat, it's a lot more expensive to, well, not a lot more, but it's a decent amount of more money to buy a position in Adidas. But I find it interesting that the brand value of Adidas is a $17 billion value, while the brand value of Nike is a $32 billion value. They have that wide moat that I absolutely love, like I just talked about, in footwear, apparel, equipment. They have the greater brand value. I think it's a greater brand recognition. I mean, people know how to say Nike. Not everyone knows how to say Adidas. I've heard Adidas, and I have no idea what that is. One other big thing that they recently did was cut their ties with Amazon for their e-commerce sales. That for me is putting in my brain that Nike wants to separate themselves, and Nike wants to be Nike on their damn own. They don't want to have to rely on third party, you know, outsource their sales, their e-commerce side of the business. So they're taking it upon themselves, making consumers have to go to their website to purchase their damn goods. For pretty much all of those reasons wrapped into one little cute bundle, that is why I recommend purchasing Nike, especially if the market continues to kind of go roller coaster here in June as we reopen America to see how the economy is going to react. I think if that drops a little bit more, you definitely need to open up a spot in your portfolio for Nike. I am going to. I will buy a share of Nike before June is over. With Nike aside, let's get on into the next one. There's a lot of data, a lot of things I want to talk about this, but I am trying to keep it short for y'all. So saddle up, you know, put your damn seatbelt on, your arms and hands inside the damn vehicle, because we are cruising. Next one I want to talk about is girl, I know you didn't eat lunch, but damn. Is in the financial sector. So when I think of financial sector, I think of 4 big heavy hitters in our banks. We have Wells Fargo, JP Morgan, Citibank, and Bank of America. Now I do own Bank of America. I do own JP Morgan. Honestly, JP Morgan is my absolute favorite. If you don't own JP Morgan, I think you need to. But that's a little bit more of a solid, well-established. Like I feel like a lot of people know that JP Morgan is a heavy hitter and one of the biggest, if not the biggest, financial stock that you should probably own. But I'm going to talk about one that I think has insane growth potential, which there we go, and they do pay a dividend, and that is going to be Citigroup. Now what the hell, Nikki? Citigroup, let me just explain, okay? Not trying to take too much time, but let's go over the basics here. They're trading at 52. They have a 3.9% dividend yield. Their PE is 7, which makes me think it's currently undervalued. If I go here, the 52-week high is 83, so we're down a ways from that. The 52-week low is 32. We're closer to the low than we are the high. Let's look at the 5-year. Yeah, so we have some growth here, okay? And yeah, there's a dip here, okay? The stock market always dipping. Oh, thank you, Mom. Here we go. Okay, see that? I like that. That shows me there's growth potential. If you look here in the last year, it's down 22.5%. For me, that's a great buying opportunity. But here's kind of the real reason why I want in on Citigroup. There's a few things, so just bear with me. So the first reason why I absolutely love Citigroup is the fact that its revenue has been growing since 2016. It was 70 billion in revenue in 2016. It was 75 billion in revenue in 2019, and it just continues to grow. Now, the net income for them did actually produce negative in 2017, but they had a full freaking recovery in 2018 and 2019. It continued to grow. So I think for that reason, people were skeptical, but I think long term this is going to be a great play, and here's some more reasons. One, it was founded in 1812. 1812. I think 2000 was a long time ago, but Citibank was like, nah, Nikki, we've been here since 1812, almost damn near 1700. So when a company has survived that long, they are going to survive. I mean, think about how many things that they've been through since freaking 1812. I mean, come on, everybody wants to talk about 08, 09 and that financial crisis. I mean, hello, they're still here. So another thing I absolutely love about, they have a lot of cash, okay? They have $900 billion in cash right now, and they have about $625 billion of debt. Their cash is easily going to cover those debts. That's always a good sign. Another thing, I like to listen to Kramer on Cramerica and CNBC, and he, about, I think it was like maybe 8 to 10 months ago, had a little spiel about Citibank that I'm going to play for you right now.
How about Citigroup? They delivered a big top and bottom line beat. They bought back 54 million shares, most of which were purchased below Citi's tangible book value of $67.64. Every share they retire at these levels is additive to earnings, and they're going to keep doing it. This is a $163 billion bank with a 3-year plan to return $62 billion to you. Meanwhile, these guys know how to execute. Citi had a great efficiency ratio, what they actually make, and the headline numbers were fantastic. Best of all, stock trades at 9.3 times this year's earnings, 2.5% yield. Buy.
So yes, that was months ago. That was definitely pre-COVID, but here's the thing, he's talked a lot about Citibank and how he stands by it and he thinks it's a great place to be. But if you don't want to base it off Kramer, obviously, which I am going to use this to disclaim that you should always do your own research. I'm just scrolling YouTube. Kramer's an advisor, maybe listen to him more, but don't listen to me that much. I'm just here kind of documenting my journey with stock market investing. I have a coworker, a friend who I look more like a, not a father figure, but just an older figure with more wisdom than me. He was a branch manager, owner of Charles Schwab, running the whole department, and he and I always talk every day on our ride home about the stock market and what's going on. And he told me, literally, only thing he said was buy Citi, buy it now and don't look back. So I trust him. He's a friend of mine. Like I said, he has prior experience working within that kind of industry. So for me, kind of was like, okay, I'm gonna have to look into this. And from what I've seen, I think there's an awesome potential for them to really grow, and they have that dividend payment that is just icing on the cake. You guys, before I get into the last third stock I want to talk about, if you could please just comment down below, comment the word money, because isn't that really what we all trying to do here? We trying to make money, trying to earn money, trying to grow money. Now I know I mentioned I wasn't going to talk about the boring staple blue chip companies that are just great, and this one may or may not be labeled as that. It's been paying its dividend for a very long time, so it probably is, and you already know how I feel about it. But that company is Pepsi. Just go watch some other videos. I talk more about Pepsi and how much I love it and how I've been honestly converted, because I did say at one point I liked Coke products better, but now all I drink is Diet Pepsi, so I've been converted. Pepsi right now is trading at a 129, which I think is a pretty good deal. I bought one share back when it dropped back, I believe it was like in March, around the 113.50 mark there, as you can see. I have a pending dividend coming in. I like that. But if we look at the 5-year, I mean, come on. And I'm going to touch a little bit why I feel like this is a good growth play. Just some stats, some basic stats. They're at a 2.96% dividend yield. The PE is 25. I don't care. That doesn't scare me. The 52-week high is 147, so we're about 17, 18 bucks away from that. Pepsi for me is a much better play than Coca-Cola, because Coca-Cola is a beverage company. Their goal is to be the #1 beverage company in the world, which they're pretty much, I feel like, already there, to be honest with you. But Pepsi has beverages and snacks. They are diversified. They're in water, they're in soft drinks, they're in energy, they're in snacks, chips, stuff. Just, you know what I mean? Grab a Pepsi, grab some Frito-Lays. Does anybody eat Frito-Lays? Like, I like to eat it with chili. That's besides the damn point. I've got to get it together. And then just a little added benefit of Pepsi paying a dividend, a juicy, sweet dividend of 48 damn years. You are gonna get paid to put your money into Pepsi and not only make money off the growth, but make money for just having it in there and having some damn faith. Any of you surprised by any of my 3 choices? Let me know down below if you agree, disagree. Let me know what's on your list. Let me know what growth stocks you're looking at, because I am trying to incorporate more of of that. I do think I need to kind of branch out and put some money into some even like penny stocks or super low valued stocks right now. Maybe ones that like may never come back. Please do me the biggest favor in the world. I'll love you forever. Smash the like button, you guys. It helps so much. It makes my dream a reality of this channel growing. YouTube absolutely loves it. Please just light that baby up. And also, if you are not subscribed to my channel and you're this far, which a high percentage of y'all don't subscribe, please just click the button, join the crew, join the journey. You already know, if you're hearing my voice right now, you about to get a kiss. You are the real MVP. Amir, you know I love you. And as always, you guys, enjoy the journey, whatever your journey is. Always remember to do what sets your hearts on fire. And I will catch y'all in my next video. Bye, guys.